You are listening to the Smart Betting Club podcast with me, your host, Peter Ling. Now, this podcast is sponsored by the Matchbook Betting Exchange, and you can find out more on what they offer smart bettors over at matchbook.com. And if you are interested in learning more what it takes to make a profit betting, please do check out my service for winning bettors over at smartbettingclub.com. Hello and welcome to the very latest SBC podcast episode, where I'm delighted to finally welcome onto the show a guest I have long wanted to have on. It's taken a while to coordinate, but it's a big welcome to Matthew Trenhaile, who most of you might better know as Trench. So welcome to the show, Trench. How are you?
I'm very good, thank you, Pete. Sorry I kept you waiting so long, but you've been very patient. And yeah, it's a pleasure to be on.
Yes, pleasure to have you on. And in a change to proceedings, and bear in mind the fact that you've been on lots of really good podcasts over the past year or so, like Circles Off with Johnny and Rob, Bet the Process with Rufus and Jeff, as well as Simon Knott's Betting People. You did a video and a follow-up. And a lot of people know a lot about you and some of your thoughts on various topics. So decided to do things a little differently today. Rather than repeat that, we've done a Ask Me Anything, an AMA. A few weeks ago, I put up requests for questions on social media. We were flooded with questions for you. We sent on questions in your droves, and Josh and I here at SBC have done our best to break them down into about 4 different categories. And sometimes there's been some similar questions asked. So kind of see a train of thought on various topics. So if you're ready, Trench, I'll get stuck in with the first few questions.
Yeah, absolutely.
Great. This is from Bernard BBM. He said, and I thought it was a good starting point, he said, given the consensus that fewer than 3% of bettors win long term, why do sportsbooks limit or kick out winners? Wouldn't the 97% who lose be enough to cover the 3% who win? What are your thoughts on this practice? And I thought that was quite a good question, given what's happened earlier this week, prior to recording in Massachusetts and the wagering limits discussions. So I imagine you've got some opinions on this to share.
Yeah, so I mean, one thing I will say for certain is that there are now more and more people on the internet who are willing to give a fairly considered answer to this question now. I'd say there are more people who either worked for operators or people who have sort of seen behind the curtain to understand the challenges of it, I suppose. But one good example of this would be to use a much, I suppose, touted solution, which is the minimum bet laws in Australia for certain jurisdictions of horse racing. And the bookmakers who want to offer horse racing on that region have to allow each customer a minimum liability bet of, I think it's 2,000 Aussie dollars, maybe. And you will then now, if you sort of circulate, I suppose, in the pro gambler circles, you will speak to people who will tell you that they are now at the point where they submit to a bot a request for a horse, and it submits to, I mean, Australia, there's a great guy who does tweets actually about the state of Australian bookmakers, the new ones that open and close. But let's say there's 100 odd. I think there is close to 100 odd.
Yeah. And
they submit 100 bets with one click for the maximum bet. So that literally, to me, perfectly encapsulates the problem with the 3%, the 97%. The reality is that the 3% can easily eat away the margin generated off the 97%. And for every pound, dollar, Aussie dollar, you name it, that's lost by the 97%, there is a huge amount of costs eroded. I think one of the PointsBets guys laid out the costs of taking a bet in certain US jurisdictions, and you lost about 80 cents on the dollar just in costs and tax, etc. So that 3% doesn't have to do anywhere near the damage that you may think in order to erode the margin. And let's not forget also, bookmakers don't want to just they don't want to break even, they don't want to make a small profit. They want to make more profit than they could effectively make by deploying that capital elsewhere. It has to be meaningful profit, essentially. FanDuel's listed on the NASDAQ. Why should I put money in FanDuel and not Apple? So it's not enough just to sort of sneak by, which a lot of what the sharper books are doing is quite literally sneaking by. They need to sort of produce the kind of profits that appeal to pension funds and shareholders, etc. So the reality is that it's not about the percentage of the bettor, it's about the size of the stick they carry. And the reality is that if you allow infinite rope to those people who can beat you, it makes everything much harder, even if 97% of the actual accounts are losers.
That's a great answer. And it brings to mind, I've had 2 guests on Tom Waterhouse, who was part of the AK Bets podcast I did, and he spoke about that being Australian, and he said it was unsatisfactory for so many reasons, and one of them was obviously all the bots. And then Chris Poole, who head of trading at BetVictor, who tried to do something similar, and he said it's just bots. So you're not actually laying a bet from genuine people. It's just a lot of automation and obviously syndicates and professional groups that are taking advantage of it. So that's a really good explainer. Kind of segues nicely onto some questions on Pinnacle, because obviously they are the sharp betting model. And this was from Ned Jim on social media. He said, after all these years, why is it still so difficult for someone else to replicate Pinnacle's successful model of doing business?
It's not difficult in the sense that you can easily get easy, cheap license somewhere. You can choose to completely circumnavigate the traditional banking system. You can choose to operate a crypto-only book. And you can find the people who enjoy the intellectual challenge, I suppose, of market making without restricting. Big Buck Hunter's done some great, sort of the head of trading for Novig, has done a great podcast recently describing the nature of market making. There are people out there who can produce. I observed it when Mustard Bet was launched and the GGR was positive, but after costs, it was hard to make the bookmaker work. And that was in the UK, which actually is remarkably cheap relative to some jurisdictions to run a bookmaker, as hard as that may seem to think. So it's not difficult for someone to create. I would argue that one of my favorite, I suppose, homebrew betting projects is Forecasters. I've met the guys multiple times. They're just absolute sweethearts, lovely people. They're trying to put something together. Someone's got to market make into forecast, like an exchange. Someone's got to provide a startup liquidity for these things. They're sort of proof of concept, I suppose, that you can do it on a really low number of staff on a real tight budget, and you can get something off and running. So the question is it's not difficult to create in a sense, but it is difficult to scale. A huge amount of, say, Pinnacle success comes from the reputation it built in the period when it could take customers from the US. And it has traded quite rightly on its reputation for sort of dealing straight and paying people out quickly, all these other things. So you can't acquire a reputation overnight. That's the reality. Even if Paris Smith decided to be the front of a brand new bookmaker, decided to come back to bookmaking, she would obviously bring great, credibility, but at the same time, people would still be going, yeah, but this is still a new project. It could fail. That's problem A. And B, you need people who, again, coming back to the previous answer, who are happy to deploy capital suboptimally. The founders of Pinnacle literally were people who love to play games. We're talking expert bridge player, people who played in the big New York and Californian games, card rooms, these kind of things. These are people who literally love the idea of booking. I'm quite sure that going back to when they opened up in the Caribbean, all those years ago, there actually was a point where they could have just invested the same money into whatever else multi-millionaires in America invest in. They could have put it in Apple stock or whatever, or Disney stock. Probably be much richer now if they had put it into those things.
Yeah.
So you need to find people who are willing to basically do it for pleasure as much as anything. The impression I get is that could Joe Brennan, with his connections, create a very credible recreational sports book in the US? He absolutely could, I think. Does he want to? No. His passion project, the same with, Derek Stevens, is that Circa?
Circa, yeah.
Yeah, and in the same way that these are men with a passion for doing something the right way. Looking back to, Andrew Black's Betfair, initial thought, these were built on not how can I get the greatest ROI or for my money this year. They were built on I really want to do this because I'm passionate about it. So I think the lack of, let's say, I suppose, Pinnacle rivals historically, in some ways a testament to the fact that there is a limited number of people whose idea of a really fun game is to try and bookmake to the whole planet. It's quite a niche fetish, maybe,
Okay.
a way to describe it.
It's a fascinating answer. Really. That's really good. There's another question here, actually, when we talk about Pinnacle. I got to ask you about, you mentioned crypto sportsbook and where we're moving in a minute. But Josh asked, in terms of Pinnacle, they're famous for not limited customers. Are there any circumstances where customer behavior becomes unmanageable for a sharp bookmaker like Pinnacle, or where their systems are not so good that they could absorb it?
So I suppose that goes into two categories. One category would be what is sort of more commonly called crept over from finance into, but maybe a toxic flow. People who are actively, constantly trying to find faster data feeds than the people who provide the data, court siding, pass posting, these kind of things. People who are playing on genuinely fixed matches. The menu is so deep now in terms of leagues offered, etc. So those people, it's impossible to accommodate. Although I do believe that Antonino De Rosa, who used to work at Pinnacle, on his podcast highlighted that both Pinnacle and Chris have paid out countless instances where he said he would never have paid out. And I'm in agreement as well. There's instances where I'm like, this person cheated and they've still seemingly got paid, and that was, the account is closed. They got away with it. Now, in terms of other business that is unmonetizable, in liquid sports, if you take the hypothetical pre-game bettor who bets just before close, who wins, so literally bets at the closing line and wins, it is, you can possibly say that that last bet informs and improves your live prices. Maybe you can generate some returns from that, but you're not going to generate anything from the pre-game. Now, in liquid sports, these people are like hen's teeth, and they can just be absorbed to a degree if they did exist. However, the problem you get is that quite often in growth sports, which is my area, we would put up sort of low liquidity sport for us and potentially weak league, and no one would bet it at all. The rest of the world is eyeing up Pinnacle, Chris, 365, say. None of these books are moving. We're all in lockstep. And then what happens is you get close to kickoff and someone hammers that. And they're the only person who bets this. Literally, like, the address is from the guy in the country where the league is. He literally is not doing, just not spooking the market whatsoever. He is literally like, it's funny how often some of the very niche league experts can sometimes actually be people who work in coaching or, you know, have actually worked like in the league or whatever. They're not even betting fixes. They just know exactly what's going on in their local sport, who's got a tummy upset, who's not starting, all the rest of it.
Yeah.
And those people, you can see, like, literally, like, you run it week after week, lost 1K, lost 2K, lost 1K, lost 2K. And you see it's just one guy. And so then you're presented with, if there's no one else betting this league, and this is the only person betting this league, can we realistically offer the league? And if there's no good live demand in particular, because quite often you eat a bit of a shit sandwich on pre to be able to offer something live, if there's no real live action, then it does become a case of, so we're not kicking that person out, but that person will log in and find that their league of choice is no longer available. Someone once said, I think, I can't remember, it was a Twitter anonymous post or something similar like that, Pinnacle doesn't kick out winners, but they kick out winners in the sense that we won't play games we can't win at indefinitely. And the reality is that liquidity is key. I think Adam Bjorn's done some good chats about this. Anything where there is enough bets can be turned to profitability ultimately. That is true. I mean, there are very rare instances where you get absolutely filled in one side indefinitely. But the reality is that if you keep moving the odds, you may lose, but you'll have averaged in at a price that's very good at some point, and then you just hope you win more of those than you lose, kind of thing. So yeah, so undoubtedly there are customers that are very much unsustainable with their existing sort of betting. There were some sports which I just had to give up on growth. There were some things or certain leagues where it just became impossible.
Yeah.
Good example was, I think for many years, Pinnacle had done sumo, for example, and just a couple of accounts that pick up their few K a year from it or whatever, and no one else bet it. And you get caught in this situation where you're like, maybe if the limits were higher, it'd be more interesting, or maybe if the margin was lower, maybe it'd be more interesting. But in doing that, fishing for better customers, you now just basically given a pay rise to the two guys who have you over a barrel every year. Because now with the lower margin, maybe they can rebet it and still get value, or bigger limits, they can just bet bigger. So basically what you're saying is you make a calculation. What is the likelihood that I'm going to find good business in our ecosystem for this sport? So I think, I don't know whether pretty sure it got culled towards just before I left. That would be an example of where, there are undoubtedly customers that aren't sustainable for all books. And I think Chris and Bookmate, Planetech do it sort of slightly different in that I think they have certain sports which can be shut off for accounts or heavily reduced limits for accounts.
Yeah.
But then the core sports that are liquid, everyone gets absolutely equal high limits, There's different ways of managing it. But yeah, so that I hope that sort of covers that.
Yeah, I've definitely seen that. Some of those bigger offshores, they won't close you necessarily, but they'll just limit you on certain markets or leagues. as you explained there. One of the queries before, but you touched on some of the main crypto sportsbooks, and we've seen an uptick on that. And Alex Aburn44 asks, what are your thoughts on the future of the main crypto sportsbooks? He quotes Stake, BC Game, sportsbet.io. And there are a few, obviously. Stake, there's a big one. Shuffle, I've seen. There's quite a few out there. Just be interested in your take on that. Are we seeing a shift towards that now with some of the regulatory concerns that we have?
It's very, very appealing to operate crypto casino / sportsbook from just the transaction cost purposes. And if you operate the purest one with literally just an email to open up, you can pretty much pretend that you have no KYC or AML responsibilities whatsoever. It is pretending, if you have a license. There's no license in the world, no matter how, as people love to say, Mickey Mouse it is, that agrees to just letting you off that 100%. But at the same time, there's no doubt that the due diligence and the attitude towards responsible gaming can, at some of these operators, and I do not have experience with all of them, be a huge benefit to them. It's no secret that a huge percentage of these businesses, it's the casino even more. It's like on a normal bookmaker on steroids. The casino even more. I even wonder to what degree stake.com, if Drake didn't love, having large sports bets, I wonder to what degree they would push their sports book as much as to the extent they do already. But, it's undoubtedly the huge lion's share of the money made by sportsbet.io was originally a big casino. That was the original project, if you like, that sort of spread out from that. And undoubtedly, .io, stake.com, all of these, they do make money from the sports betting side. But it's the casino that is the big driver. Crypto essentially attracts a risk-on profile customer. By definition, if your thoughts straight after you've become an overnight millionaire due to some pump in crypto is that I now want to play some roulette, that's about as risk-on as it gets.
Yes.
Shuffle is fascinating because the guy behind Shuffle is literally posting their turnover numbers each month. And they're just ridiculously parabolic, like 2 billion turnover in a month or whatever. But my assumption, and I think I've largely been called correct on this, is that it's well over 90% of it is casino volume. And within the casino, a huge amount of it will be crash games, sort of ridiculous low RTP slots, and also crypto-specific games. Once upon a time, Crypto Dice was sort of very much the hardcore crypto-specific one. But now if you can look at something like a Rollbit or whatever, and they've got a whole myriad of crypto games, and they all have the Twitch-style chat box. So people are just spamming, shitposting, trolling each other while watching other people gamble on games that look like they were made on a phone 10 years ago. And also they literally have now plugins. See, when you're so unregulated, you can have these plugins that allow you to basically bet on the price of crypto, like binary options, effectively, as they used to be called when they first came out in finance. It's the idea that they expire in 10 minutes, Bitcoin up or down over the next 10 minutes and stuff. So as long as crypto is having its time, and as long as it is much easier to operate a crypto book, more profitable and easier to operate, then they're going to continue apace. Interesting to see that there are obviously attempts to pivot by some of them. So the YOLO group, as it's now called, that sort of owns sportsbet.io, they sort of VC fund effectively in lots of things in the gaming space and all sorts. So they're trying to have sort of options that aren't entirely reliant necessarily on the price of Bitcoin effectively. There was talk of stake.com buying a US operator. The reality is that obviously you give up a lot of the advantages they have by being a crypto book if they do that. So they're basically saying that we know how to get meat in the door better than anyone else via influencing, etc.
Yeah.
If somehow some US state nerfed the use of celebrity endorsement and Stake can't use Drake or whatever, then I have no idea what the play was when they said that, to be honest. I'd be fascinated to know if they do actually. But yeah, as long as crypto's ticking along and as long as governments and financial institutions, data providers, etc., all continue to have their hands out to sort of squeeze the bookmaking pie, then it will continue to be sort of appealing business model to run and a profitable one.
Definitely. It's just very much, again, it's a casino driving like we have seen in the regulated markets for so long. Another question about, I think it's a crypto bookmaker. I haven't used it myself. I've seen a little bit. It's Polymarket. Beaton Dockett was asking, what does Trench think about Polymarket in general? And then how would he look for value in a market like the presidential race market. I understand Polymarket have quite a lot on politics.
It's very interesting because as we're recording this, I think just yesterday was the announcement from is it the SEC? I can't remember, but basically their prediction markets have been effectively legalized in the US. So Predict was allowed to operate very small for academic purposes, prediction, some rubbish. But basically, Kalshi was, I suppose, one of the big sort of prediction type sites, took the court case and they won. And Interactive Brokers, which is comfortably the largest retail brokerage platform on the planet, I would say, they basically literally launched their product the day that it was announced. They obviously had it there to be switched on immediately. The presidential sort of, I don't know, they went up with maybe a couple of markets, I haven't checked to see which ones it actually was. So if I'm Polymarket, I would have been much happier if it stayed illegal and everyone was just depositing crypto into me to punt it because there was no other outlet.
Yeah.
Are there some entities who would much rather be operating with the likes of an Interactive Brokers? Depends. If Interactive Brokers requires you only to deposit in US dollars, then there'll be plenty of people out there who don't want to do that. They want to use crypto. So there'll always be a market. Polymarket's a weird one. The founder's an interesting character. To me, there's a slight SBF vibe going on. I saw a photo the other day with him posing with Trump's son, I think, and a few other people at dinner or whatever.
Oh dear. That's Sam Bankman-Fried.
Yeah.
Sorry, just that SBF is their founder of what's the...
FTX.
Yeah, FTX.
Yeah, Alameda and FTX. Yeah, I mean, it's easy to say that all crypto projects have a slight grifty feel about them. But there is this element that Polymarket A's growth has been enormous. And B, I'm sure it's been built on the build quick, fail fast kind of premise in terms of technology and back end, etc. And undoubtedly smart people involved. But I don't know. To put all of this to one side, I suppose if people are ultimately asking, what's the future of prediction markets or whatever, prediction markets are always going to be a thing. But as Nigel Eccles says, the test of Polymarket is what it does after the election. Obviously, this is possibly one of the most interesting elections.
This is the last one.
But we are living in a sort of, I suppose, a decade and a half era where elections have been, I suppose, particularly antagonistic and polarizing, maybe. I wonder what it will lean on after that. I wonder slightly how well they're not listed on a stock exchange. They haven't had the due diligence and forensic accounting over their practices behind them as thoroughly. But to me also, I reached out to someone very smart and very knowledgeable about such things, about how the ARBs that were appearing between Betfair and Poly in particular were so large at times. Why weren't they being closed? And it sort of reminded me of, for those who are sort of crypto long-termers, it reminded me sort of the Mt. Gox, other Bitcoin exchanges, when there was a massive dislocation. Exchanges were offering huge price discrepancies on Bitcoin between them. It does appear to be sort of a mixture of settlement terms and rules of the market, a trust thing, sort of a variety of things. But definitely the people was speaking to were pretty risk-on type people, and they were cautious about putting money there. But at the same time, for me, they're also the kind of people who did the calculation of, if this is the chance of not getting paid at all, 8% probability, what size edge do we need in order to sort of make it worthwhile taking the risk? And also, how does that risk of blowing up change over time? Is there sort of a Lindy effect? The longer Polymarket exists, the more safe it becomes just by definition of having lived so long, kind of thing. So maybe that risk decreases. But I think you're always leveraged to what happens in the wider crypto world. If crypto goes pop for whatever reason, then good luck getting your money out, I suppose, sort of any sort of speed. I've seen people, one of the interesting follows always for me on Twitter is Templeton Peck, who, regardless of agreeing or disagreeing with his own personal slant or world, I think he always comes across with some very interesting perspectives. And B, the way he reads the political markets is excellent. And he's made significant money from the exchanges in the UK by being very good at them. And he made the jump to put money into Poly, largely because Betfair's just sort of struggling to keep its coherent product together. So that sort of, to me, is, as always, judge of judges territory. If someone else is willing to, the kind of person who would do some of the evaluating. If you see other people, sounds a bit sheep like this, doesn't it? But if I see other people who I think are credible and have value making the leap into it, then yeah, I would say at this point, if you're betting on political markets and you genuinely make a good portion of your money from speculation, you'd have to be in it in some capacity, even if it's a small one, because they're providing liquidity, they're providing liquidity that at times is quite dumb and opinionated. I think someone tracked that if you basically sold all the complete ridiculous 2% chance that Trump pulls off his face and is a lizard or whatever. if you sold like all the nonsense on Polymarket, you basically made great money by you're basically backing 105 shots, but you made great money doing it because there was just so much nonsense being put on there. So I mean, some of these markets, I wonder like literally who's doing the settling, and I don't know whether it's decentralized settling. I don't know if there's some contract element to it. I haven't looked into it enough. But yeah, it's an interesting one. But for me, it's not crossed the threshold because I don't bet very much political markets. It's not crossed the threshold where I'm in, but I wouldn't put anyone off, and I'm fascinated to see how it plays out, I suppose.
Yeah, well, sensible advice. Follow those people who you respect, who perhaps done their due diligence, and talk to them or follow them if they start to utilize or recommend a website or new platform. Certainly something to consider. Let's pivot then to talk about syndicates. A couple of questions on syndicates. One that was sent in to Josh, and this is about horse racing as well. So there's a couple of questions here. How many syndicates are shaping the UK and Irish horse racing markets daily? And this was from another one from Tony Keenan. Is there much difference between those shaping the UK and Irish markets, or is it the same people? So a couple of questions there on UK and Irish horse racing.
Yeah, how many? A lot of questions today are good questions. So consequently, there'll be nuance to them and grey area.
Yeah.
It does in part depend on what you classify as a syndicate. If we're just classifying more than one person collaborating to bet, but I'm going to use the assumption of what most people consider to be a syndicate, which is someone who contains multiple people working on a project that is of a certain size. We're talking sort of million plus bankrolls, and they're potentially either betting every race, multiple horses, or out and out market making every race. In terms of the significant market makers, as in people who are literally posting backs and lays every single race every day, it's more than one, but I don't think it's necessarily significantly more than one. Now, there may be sort of full scale, I feel like maybe it's 2 or 3 at this point. But in terms of people maybe who do every race but don't do 2-year-old maidens, or every race but don't do jumps, or in terms of are there sort of slight modified versions of these, there could be a handful more of those, I suppose. And in terms of syndicates, like who are people who are just price taking, or maybe potentially just micly. If you look at something like the great service that Kieran Ward offers, SBC members will know, if Kieran Ward set up something that it generates a lot of bets, if that was plugged into Betfair firing bets all day, every day, would you classify, if he worked with a few people, would that be classified as a syndicate? And to me, that's not what people think about when they think of syndicates. But I think there's still plenty of people who are betting enough to shape the market, as in that active in the markets. But in terms of the full-blooded, basically people who you can trace back either to Bentner or Woods or Gelco traders who left him or whatever, like in terms of the number of big groups that are sort of doing the mass multi-pricing thing, I think that really is less than 5. And I'm absolutely happy to be corrected on that. Please, if you have a different spin on that, do reach out and tell me, because that is a bit of guesswork from me. Are they the same people on UK and Irish? This is a difficult one in the sense, so there are some people who just don't do Irish racing. So sort of the less than 5 group will do everything, especially everything that doesn't have a parimutuel pool. So there are definitely people who have computer groups in the US who won't bet into Betfair US racing because they don't want to leech IP, because they want to be able to bet into the pools in the US. So you have people anyone who's big enough to be doing very large scale rebate-based parimutuel pool betting will not bet into anything in the exchanges which may cannibalize that, because that's real money with the rebate. And anyone who's tried to bet on US racing on Betfair will know that it's pretty thin. But in terms of UK and Ireland, in both cases, the tote market is shit. There's just nothing really. The big groups will do Irish racing. My understanding, it may have changed, things may have got better, that Irish always made less than UK. And my understanding is that consequently there were some people who just ditched Irish altogether, and it becomes self-fulfilling. So as the markets in Irish racing gets thinner and thinner, I think collectively it always is thinner than the UK, is my perception. You can basically get this situation where like it's sort of a downward cascade. So I think there's definitely less people doing Irish racing. And I think it's a multitude of reasons for that. The one that I always think to my head is that in the situation where Irish racing, it feels like this happens more than in UK racing, but multi-horse entries into races by trainers. It sometimes feels like trying to unpick an Irish race is trying to almost understand the trainer or the yard's strategy for that race. If you've got 5 horses in there, are they all being raced 100%? Is there instructions? Is there I don't people who actually follow horse racing may think I'm talking about my arse here, but to me there's this kind of element whereby I almost want to back every Mullins horse in the bloody race, or I want to lay every Mullins horse in the race because I just can't figure out, is the second stringer actually the first? And I think algorithmically, you can put in a feature that says number of trainer horse count, let's call it. And literally it's like a feature you put into the learning model that says, how predictive is it that a horse, which is one of multiple other entries in the race, wins? Does being a multi-entry group of horses make them more likely to win? You can do these sort of exercises, but they just add an extra level of complexity and difficulty. It does also feel like some of the more comedic gambles, the 40-1 into 6-4 type shit. It feels like that's been sort of more Irish based than UK based. But again, people probably who follow the markets closer to me can point out 10 times it's happened in the UK in the last 6 months, for all I know. I think basically the larger scale syndicates want to be able to just literally have a model, ingest data, recalculates, post backs and lays, takes bets, adjust, takes bets, adjust. They want to be able to do that. They want to be able to do it with confidence. And I think that there's enough going on in the Irish market that suggests it's hard to be as confident, would be my assessment.
Yeah, I see that regularly. People saying, I've given up on Irish racing or removing that due to the unpredictability or other issues that prevent them from feeling confident in utilising it. This podcast is sponsored by the Matchbook Betting Exchange. When it comes to betting exchanges, Matchbook has been my personal go-to for some time now. Using horse racing as an example, they've offered the best prices on the most runners this year, which can make a big difference to your bottom line. Plus, with an industry-leading score of 4.2 on Trustpilot, you know you're in safe hands. Download the Matchbook Betting Exchange app or go to matchbook.com today. And if you enter the code SBC150, that's SBC150 on sign up, you can get commission free for your first 150 days, which can give you even more value. If you need to place a larger or more bespoke bet, or are indeed a corporate or operator client, their brokerage service is excellent and available 365 days a year. For more details, email the team at brokerage@matchbook.com. Matchbook Betting Exchange is for bettors who know better. I want to move on to effectively what I've broken down to practical betting tips and perhaps some advice on various questions about getting on and on other things and winning Betfair SP. And this is a good one actually from Gene Capex on Twitter. He says, what is your vision regarding value betting by comparing Pinnacle's odds with soft bookmaker odds? So that would be steam chasing, for example. So once you know your vision, but I guess we'd probably expand into the reality of doing it and whether you have opinions on whether people should do it and if so, how they should.
It's kind of my labour of love in the sense that analysing market dynamics, I suppose, has been the area of my greatest interest over the years, and which bookmaker has the best odds, to the sharpest odds, etc. And like all things American, you think that people have iterated on something and it turns out they've got no fucking idea how much can be iterated on, because I see new Twitter follows literally every day with some new version of demargined sharp book comparison kind of value screen. And there are people out there, it wasn't that long ago, maybe a couple of years ago, maybe, I don't know, maybe it was more recent, the likes of Andrew Mack and Miguel at Winners Odds are doing like the R package for various different ways of removing margin with all the different methods that people have been discussing. Joseph McDowell obviously massively switched people on to like all the different ways of demargining and so on. In terms of like vision, I suppose it's something that categorically works, and it works in all walks of life, finance, trading, any trade, like the leaders and laggards is like just as standard. So I don't think it goes anywhere.
Yeah.
I think it carries on. I think that it is so popular now that it's very obvious when certain popular software, in the same way that there was sort of peak rebel betting going back many years, ARBs were just utterly obvious because the same 50 plus thousand accounts or whatever were all trying to hit the same price, same time. So I think it sort of perpetually becomes a sort of a race condition game. People who basically can get to the price first and then sustain the accounts that allow them to continue doing it. I think in terms of demargining, it's relatively solved. And the thing that to me seems always, people are always looking at screens that then post a Telegram notification or whatever. If you're seeing this, surely you must realize that there are people who are doing this without responding to a notification. They're obviously botting it, right?
Yeah.
And to me, it's kind of like, where does that translate to ultimately when loads of people are botting this stuff all the time, even at like a lower level kind of things? Like arbitrage came to the masses, value betting came to the masses. There was a company that sort of worked with the betting is cool stuff, with Christian stuff, that basically would build bots for you. I can't remember what it was called. Like they tracked some tipsters, but like it's just a matter of time before I use BF Bot Manager for Betfair and stuff. It's just a matter of time before there's more sort of mass market. Plug your idea into this and it will submit bets to these 50 bookmakers automatically, etc. So, I'm sure like the weaponization of it will carry on at a pace. And yeah, it'll continue as long as there is signal still in the market maker books. There's no obvious reason it should disappear completely. It'll sort of continue to make money for those that practice it, and it will continue to become more and more congested and hard to do. I think John will just have to get back to us with what he meant by vision a bit if he wants something more detailed there.
No, it's true. I've seen some more, if you like, more mass market products from the types of places which go on, what was it? It's like the Mums Forum, where it was telling people how to take advantage of free bets. And it starts to get that mass market appeal. I've started to see that with some of these products where it's being sold to people who just don't have any idea about betting. They just think it's the easiest way to make money. And as soon as they get an account closed after the first 5 steamers, all lose. And they question the logic behind it. So we'll see that evolution, I think, over time as it becomes more popular.
I got to just say on that note, I do love the story though. So I just listened to Tom Brownlee's bookie bashing podcast just recently, the most recent episode of that. And he said that at the Bashcast event that was held in London, he met a young couple who'd quit their jobs to basically value bet from home together. And I thought to myself, at least that's one romantic story that's come out of basically grinding advantage play.
Exactly. Yeah. I mean, why not? You work from home, work together, make a little bit of cash. Yeah, exactly.
Sounds like pure hell to me, but don't tell my wife, obviously. Yeah.
Likewise. So then a little pivot on to talk about Betfair SP. A lot of people looking at Betfair SP for very obvious reasons. TR1472 asks, anyone wanting to win in betting who is betting fixed prices should be aiming to be SP/BSP long term. Tipsters systems can be successful betting only BSP over a large sample size, but is this just down to them making the most of an edge the market as a whole has not yet fully accounted for? Just variance, or is it something else altogether? What do you think on Betfair SP?
So probably something that requires sort of a longer than I'm going to give to now, but Betfair SP is sort of very interesting. It literally is ported from the London Stock Exchange closing auction for stocks, right? It literally is, you can submit market orders and limit orders to any sort of closing auction, generally in like stock exchanges. And then it uncrosses at a price that everyone gets. And if you have a limit order and you're not within the boundaries, you don't get matched, etc. If it's market order, you get the price regardless. So, and I'm always slightly intrigued that other exchanges, there is no doubt we could absolutely get either Peter Webb or Mark Littlewood, one of these people who keeps massive amounts of Betfair data. I'm pretty sure they can show the percentage of volume that is matched at BSP versus pre-game, sort of race trading. And like, it's significant, right? The amount of, it's not nothing. It's quite a lot of money that goes through BSP. There's definitely been a rise of tipsters who tip to BSP as well. And I'm sort of intrigued that BetDAC or Matchbook sort of this kind of, we've looked at it, but we're not whatever. And I'm like, to me, it's just, what are you not sure about? The engineering of it's not that challenge. Look at me saying, obviously it's doable because Betfair have been doing it for ages. The implementation is there. Now, whether it doesn't suit you as much if you don't have as much natural P2P liquidity, if you're the market maker, maybe there are inherent challenges behind that. If you have a big in-house market maker contributing to the liquidity pool that has to sort of create a competitive SP, I don't know whether that changes things or not. But yes, there's 2 ways of looking at it. BSP over a massive average, very accurate, very predictive. This is not open for sort of discussion. Over a massive sample, it's very good.
Yeah.
But of course, it can be in pockets, it can be terrible. So some people just spot these pockets. So for example, there was persistently, if you bet horses which had never run, so very first run, you could make money at Betfair SP. And if you think about this, let's say you're basically modeling large amounts of data. And let's say your model has to use a prior, and that prior is basically based on jockey, trainer, and sire data, blood data, And let's say that on general, because there aren't that many horses that run with 0 runs or many races a day, that sort of where this is a factor, maybe it's a part of your model that goes sort of underworked on. Maybe the price is a bit weak. And so what you could do for a prolonged period of time was literally just back these horses blind at Betfair SP and you made money. It persisted for right up until people splashed it all over the internet. There was a good multi-year run where you could have done this and made money. And it was sort of retrospectively, you thought to yourself, oh yeah, no, I can definitely see why that would be the case. And Betfair SP, even though it largely is a aggregated product of algorithmic trading houses, can still have biases, inherent modeling biases within it. So there definitely are people who beat Betfair SP because of basically modeling a certain corner of it better than others. I would always ask people like who are betting to Betfair SP either individually or follow a tipster to be much more granular about where the bettor is winning at Betfair SP, because quite often you'll find that it's all weather or it's all national hunt. So national hunt flat is probably the weakest Betfair SP market. If you were going to look to exploit BSP somewhere, you probably would look there. It's the highest volatility market. So it's always interesting to see whether exactly class 4 handicaps, so reasonable quality handicaps where every horse has got like literally a telephone number of placings after each of its name. It's incredibly data-rich race. What are the chances that your tipster or you can beat Betfair SP on a 10-runner race where every horse has run over 10 times and multiple times in the last 3 months, whatever? That's probably tougher ask. Who knows? Maybe you've got the gift. But the other dynamic to Betfair SP is that the money is always ever so slightly disproportionately front-loaded. So the money on the first, second, third, etc. Now, part of this is there are still some people who heavily pre-race trade. So there's blocks of money that go through at the front of the market because people want to trade where the prices are tight and where there's volume going through. And there are people who sort of focus on betting at the front. There's a sort of a myriad reasons.
Yeah.
Bookmakers on course who have basically books that are very front of the market dominated. Picture when their hedge gets submitted to the exchange, if they're greening up, all the money that they're hedging basically comes in on the 1, 2, maybe 3 of them. You create this sort of circle of liquidity that is front loaded, which means that essentially, if you're market making a horse race, you are managing liabilities predominantly across that front of the market, and you do not get much feedback loop to your prices. So something that could be 50, could be 40, could be 30, tends to sort of float around, not really knowing if it's 50, 40, or 30. While the thing that's 1.89 or 1.9, the market fucking knows whether it should be 1.8 or it gets very good down there.
Yes.
So picture the market maker taking loads of money in hand A and pushing out prices with hand B. And it doesn't know how far it's pushed them out until it takes a bet. And if there's no one out there to take the bet, then it just sort of never really knows. So that's why there's sort of more uncertainty with these bigger prices. And then basically the Betfair SP price for those becomes an aggregated sort of midpoint minus whatever the appetite is to bet at those. Anyway, the net result of this is when you look at Betfair SP, people who are successful, a huge portion of the money is made at the bigger prices. And I argue that often Betfair SP is predominantly more inefficient at those bigger prices. So that is another way, like if you were starting out as someone who wants to try and Betfair SP, I'd be looking at the sort of the double-digit plus prices. And then consequently, because I'm looking at bigger prices, I'll be looking to bet a shitload of horses to sort of try and moderate the downswing on it.
Yeah.
That's one of my views on Betfair SP.
No, it's interesting. And we do see that often, those obviously at the market where they're betting at bigger prices. But that comes with the challenges of to evaluate an edge, you need to have a large sample because you're obviously betting big prices and more vulnerable to variations based on short-term form. And then obviously, like you say, the volume question is important and how are you going to handle those bad runs? You know, there are quite a few Betfair SP profitable tipsters, but inevitably they can go months without having a big winner before they fire in a couple of 60s and then it all makes a difference. And exchanged emails with people concerned about that saying, oh, I've not had a winner for 2 months. I'm like, what's your strike rate? What do you expect?
The next step for SBC for me with horse racing evaluation, with the rise of the Betfair SP tipster. So someone who sort of touched interestingly on it, something that I've sort of long had in my mind, but I think it was Rufus Peabody, it may have been Telemachus, it may have been Rufus, but they did an unabated article called something like expected ROI or adjusted ROI, something like that. And the idea was that you could sort of take out the luck elements or the overtime elements or whatever of the games you'd bet on. So even if you didn't get CLV, it was another way of saying, is my process correct or not? And to me, essentially, at its most basic level, if I'm backing the 10th priced horse out of 10 horses, then the number of horses it beats home, that is the measure to a degree. If I take the 10th ranked price and my horse finishes 4th, at a very, very basic level, it has outperformed expectation.
Yeah, very good. Yeah.
Alternatively, what you can do is you can take the 6 horses below it and you can add up their implied probability from Betfair SP and see how much probability they beat. Because you probably want to really be impressed by someone who finds the 10-1 shot that comes 3rd when the 6-4 favourite comes 8th, because there may be spotted weakness in the market. Now, this utterly rudimentary basics thing that I've just described can be polished. Is there an even better version than this? Absolutely. For starters, if your horse comes 4th and loads of horses were just sort of, non-triers or there was a collision, it's one of these statistics that probably benefits heavily from adjustment. But again, when you get to sort of 1,000 race sample plus, knowing how often your horses outranked their price will start to have some fuzzy meaning. And if you get a good data scientist on this, I'm sure they can find out something that a better measure of, are they picking horses that outrun? Now, are there still guys who pack horses that are completely bimodal? Literally, they win or they literally finish last. That guy's getting fucked by that metric because literally he's just looking for the most high variance horse always. And so that is very tricky. And you just sort of almost have to give up and say, I met the guy, he's a genius, seems to know what he's doing, lives in a massive house, fuck it, I'm riding with him. Or you just got to disregard it. But I definitely think now, it's not really been something, because Betfair SP provided such a good closing line for horse racing tipsters. But I think now, as we get more BSP bettors and more BSP tipsters, I think some measure of how well the horses they tip are running relative to expectation is definitely where the next step is to go.
That's a good point. And as you're talking there, I think I need to talk to Mark, our analyst here, because that's definitely something that would be of interest to him and we could go through that. And I think, yeah, I absolutely see it. And I often think of that in relation to golf, because I bet on golf. When I maybe have a guy that's finishes, I don't know, 6th, but he was the 25th ranked golfer in that tournament. Or I have a guy who's 80th and he finishes 4th. And obviously he's outperformed. And I often try and view it from that perspective when it comes to the variance of golf. So that's a really good point. Let me talk then a little bit about your personal betting insight and experiences. There's quite a few questions on this one. So I'll start off with the Betting Lounge, who said, what's the biggest edge Matthew has ever seen exploited? I'm interested in this one.
There's ones that now have almost sort of become notorious just because they're just sort of nonsense. I don't know, Rob Pizzola loves talking about the one where there was a bookmaker that didn't realise there was an hour change between races that had already been run and finished. They didn't realise that the horse races had been finished because the clocks had changed or whatever. Or the guy who said that there was an offshore that basically would quote like the top 20 golfers and then the field. And then they saw that UK bookmakers offered something called each way. So they allowed each way on the field. And the guy realised that it was just like 4,000% EV or something ridiculous. In terms of things that I've actually observed people do, it generally falls into the sort of the being able to put into accumulators markets that you shouldn't be able to put into accumulators, that kind of that. All true edges, true sort of good, honest edges, never look that ludicrous, if that makes sense, I suppose.
It does.
And there's always sort of some sort of slightly sort of grindy, not how the game was meant to be played kind of element, I think, to that. So in terms of the biggest edge ever exploited, Tony Bloom being sent to Singapore for work, meeting all these people who would basically take massive bets with no knowledge of what the price should be on Asian handicaps. That's the greatest exploit. He's officially or / unofficially a billionaire, owns a football club. Probably exploiting the Asian appetite for betting stupidly is the biggest ever edge exploited. Or getting rebates from racetracks when you're a fucking genius syndicate. These are the biggest edges I've ever sort of observed. Gambit Research setting up odds comparison bots to bet into bookmakers when arbitrage was just fucking everywhere and you just could do it. There's loads of things that are just sort of massive first mover advantage stuff, basically.
I've heard you say before on another podcast, those people who risk more than perhaps they should, of that risk of ruin. And those are the people that obviously really took a chance and benefited from it. And we only hear from them, less so the people who took a chance and failed.
The guys who first went betting in running on course, the guys who first got SIS hooked up at home or in an office and got to basically back horses as they crossed the line, all of that stuff. They're just sort of, the biggest edges are almost boring in their basicness, but they're enormous, this kind of thing, just because they're like, I'm not interested in them in the sense that I look at them and go, obviously that's a fucking great edge. The edges that sort of more interest me are the ones that were sort of harder to find. There was someone who, there was like not enough granular darts data, and someone made the leap of paying one of these like Upwork type organizations, basically some guys in Asia, to basically watch every darts match for the last 20 years and put fill spreadsheets in with the stats. And the reality is that he just wanted to come up with a better number. He wasn't trying to cheat or anything. He just thought, I can make a better stats model if I have all the stats. And there's no easy way to get it. It's like the guys who used to sort of set video cameras up at dog tracks where there was no easy way to. Those are the kind of edges that like turn out to be really big, but also they're just sort of a product of like, invariably they're a product of going to another length that people can't be fucked with. I always quite like those. I'm always quite impressed that someone was like, if someone told you, oh, by the way, bookmaker A trades the tennis 10 minutes behind. Do you want to go to Monte Carlo this weekend or whatever? That's to me just like, well, it's just an obvious thing. But when someone has thought, I make 3% betting on darts, but maybe I could make 5% if I knew every single missed checkout for the last 20 years or whatever, I'm like, no, lots of people would have thought, oh, fuck that, I don't care. I'm going to look at something else or just happy with my 3%. Whenever there's a degree of mad obsession going on, those are probably the more interesting extreme edges, I think.
Very good. Another one that was sent into Josh, kind of similar about edges, and you mentioned a couple there. Who is the best gambler you have ever met and why? And who would you like to emulate if you could? For example, betting without, he said betting without Bentner, obviously Bill Bentner. Yeah, so tell me, who is the best gambler you've ever met?
So I better be cautious for your US audience, because I did have lunch in London with Rufus recently, but I'm afraid he's not gonna win it. But no,
you've been on his podcast, so
not because he isn't smart, not because he hasn't won lots of money. I'd have to put Jasper White there, I suppose, in terms of someone I've sat in the same room with, talked about betting with, etc. It's probably Jasper, who's one of the founders of Gambit Research. People will often have their experience of Gambit via the platform Molybet. Is the sole owner of Mustard Bet. I'd say in terms of someone who just is able to constantly assess and analyze markets and opportunities and so on brilliantly time and time again with seemingly no tiring of it, it's probably him in terms of, so in terms of like person I've actually met and sort of met for any length of time, I definitely would have him. I've never met Bloom. I've never met in person Matthew Benham, for example. Mm-hmm. So that's the one. I mean, I was at a party where Jelko was there, but I didn't speak to him at the time. In terms of people who I would like to, again, I'd love to be the person who was behind Gambit. There's plenty of people I respect and admire, but in terms of, I'm so impressed of how they did it, and sort of, it's probably him, I guess.
Good answer. So it kind of segues on to a couple of questions about yourself and your own betting. So Lillian asked, why are you not a professional punter? And then another question that was sent in said, how different would your character have to be to make it as a professional gambler?
So why am I not a professional gambler? Skill issue, probably. But in reality, the professional gambler version of me would be probably taking a pay cut relative to what I can make by working, and would be a much more anxious and stressed out individual. Could I work hard to become better at gambling and find the connections to help me with gambling, etc., to scale it and so on? I'm sure I could, but just not as interested in it as I'm in bookmaking, to be honest. And I'm very interested in both, I should say. It's also one of those things, like, just don't ever assume that if everyone thinks I sound knowledgeable, I appreciate that. That's very kind of them. But it just doesn't translate directly to strong. It's not as strong a correlation between that and making money from markets as people might think. There are plenty of people out there who just have quite blunt edges, but get the absolute most out of them. It's like, do the most skillful players win the most titles? I often think in cricket terms. There are cricketers like Andrew Strauss, who had like 3 shots and just got the absolute most out of them. And then you've got other people, David Gower, these exquisite batsmen, they did well. It's very easy sometimes to overestimate, why isn't the guy who's like at the Wharton School of Business, the head of economics there, why is he not a billionaire hedge fund owner, I guess? It's just because the mindset and the skills are different. Gathering and retaining knowledge is sort of enjoyable in its own way for me, but actually sort of deploying that knowledge in anger and monetizing it is sort of a different thing. And my mindset was the question, how much would my mindset have to change or something?
Yeah, it's a strength of character to go, do you know what? Not everybody is a winner, despite the fact that everyone claims to be. And I think of, when you're talking there, Joseph Buchdahl, who's obviously a good academic. He's an author on betting and understands the topic, but he admits, I don't win. I'm not a winner. I had no aspirations to do that, but I can still understand my topic. And that strength of character to say, do you know what? Perhaps it's not suitable for me. I much prefer the more reliable income from a steady job or a wage rather than the volatility of and the challenges of making a profit betting.
I think if I look at the anxiety that being a consultant gives me, and that's going to be leagues away from the anxiety of being a professional gambler for me. So yeah, so I definitely think I'm just not built for it, I guess.
Yeah. That kind of segues, probably a brief one on this, but Helpful Punter says, love the transparency of the racing bets you've been posting. You've been doing that on X for a while, but he said, I'm pretty sure I saw you say that you're a losing racing punter. So why do you keep doing it? I guess you're trying to, what is the reason?
I was an odds compiler, and the thing that most interested me in bookmaking ever was coming up with odds. That undoubtedly was the most interesting aspect for me when I started out. So I treat it like, I suppose, someone might treat Sudoku or a crossword or whatever. I always like to be trying to price something in my life as just a way to keep the brain active. And particularly I like horse racing because I've never been a horse racing trader. I've never been a professional horse racing bettor, but I really enjoy horse racing. I got a little bit involved in sort of small scale syndication, which I'm really enjoying. So it's just a great way to sort of take me out of my comfort zone, out of my area of expertise, and try something. And just posting it in a way is like accountability. I noticed for a while that Josh would bookmark them. And I thought, oh, great, I don't have to track these because he's undoubtedly going to be putting these in a spreadsheet somewhere. But then I think the bookmarking stopped, and I thought, yeah, he's found me out. He's not bothering with this anymore. But first of all, I thought to myself, I can't be bothered to track all of this. But sure enough time goes by, and you're like, just one little Excel sheet, why not? And then pretty soon you're jamming in all sorts of metrics and pie charts and fuck knows what else. It's like, it wasn't me that read a book. Someone else read a book. And someone said to me, like, it was one of these wanky books that talks about basically how you should live your life optimally. And they talked about time management. And I remember having this is years ago. I remember having this debate. This person was like, if you're not enjoying the movie after, let's say, 30 minutes, you should get up and get out of the cinema and go use the time more optimally. I remember at the time, I'm someone who has finished books that I hated, simply because of my sort of completionism nature. I did not want to not finish the book. And the idea of walking out of the cinema was just anathema to me. I completely understood the logic behind it.
It's just the idea of doing something, even if you don't have an aspiration to make it a profit, just to almost prove or to learn something and prove to yourself or understand something a little bit more in depth. I can relate to that cinema thing and books. Yeah, I've done exactly the same.
That's right. So the amount of time it takes to know when to get up, like we were saying, like, when do you get out of the cinema? How many minutes do you need to know whether it's going to be good or not? And it became like this one-upmanship. One person would be like, I'd need a minute. Within a minute, I'd know. It's one of these wanky things. And to me, it's what's interesting is that the comparison between if you have CLV from a good place, how quickly you can predict whether someone's going to be any good or not, in contrast to how long it takes if you don't have that metric. Just off pure ROI, how long it takes to know whether someone's good. And I thought to myself, well, there's enough smart people who follow me or I follow, etc. And there's enough sort of profiling tipsters, profiling bettors. It's all sort of interesting to me. And I thought to myself, what is the shortest number of tips I could give and be confident that this is now a waste of time? Bearing in mind, literally, if I'm going to just literally lose the margin, if I'm going to lose 2% a runner, like the bookmaker's margin, indefinitely, not going to do it. If there was evidence that I likely could be break even or whatever, that would be something, tweak things, whatever. And I have this in my mind that within anyone who's ever downloaded Joseph Buchdahl's p-value calculator will know that in one of the boxes of instructions, it says, wait 200 bets at least to sort of let the noise die down. And I thought to myself, can I do 100 to 200 bets? Bearing in mind BSP is a good indicator. And I have access to that if I'm betting horse racing for the off. And I thought to myself, now how small a sample can I get away with to know whether this, and I thought to myself, how refreshing that would be. Like, oh, I've only done this for a few weeks, proved I can't do it. Brilliant, go find something else. Like, I almost found sort of a perverse satisfaction in how fast could I know I'm wasting my time, basically.
All right, that's good answers there. And I said before, but we'll keep it too long. And I know we'll go over an hour and 10, so we're just obviously fascinated to talk to you and try and go through a few final ones. And I was going to ask you about, Alex asked, do you have experience using tipsters? You referenced a few. I guess you use a few yourself, do you? Or is it just from a exploratory perspective?
There may be gaps in my subscription. I've been a secret betting club era and sort of a long-term subscriber, one with the other.
OG.
Profiling of tipsters is fast. If ever I got rich enough not to need to work, I would definitely be asking you or some of the other sites that review tipsters, oh, just throw me a tipster now and then I'll happily write a report for it. It's something I've always loved. Always been fascinated by tipsters, right from reading early Racing Post ads, talking about with Tomo's Tips or Osiris or whoever. And we'd always have Racing Posts in the office when my first bookmaking job. And would always look at that. And one of my early jobs was filling out the spreadsheet where we would track, back then it was Jeremy Chapman, who was the Racing Post golf tipster, now tips for Fitzdares.
Yeah.
And Dave Tyndall, who back then was Betting Zone, which was what Sporting Life website's betting section was called. And Keith Elliott, who ran a premium phone line for golf tipping. So I was on golf. So we tracked those three.
Yeah.
And then we would also track some youngster at the time, newbie guy, Ben Coley, was just coming onto the scene when I was tracking it.
Never heard of him.
Oh, specializes in women's golf. Another Betting Zone guy. Occasionally comes on to Dave Tyndall things. And also then Steve Palmer appeared on the Racing Post as sort of the second tour writer to Jeremy Chapman. And right back then, there's definitely a deep-rooted laziness kernel within me. So the idea of basically saying, I loved coming up with odds, but I also love the idea of having my hand held. And so people just completely underappreciate, like, why would anyone follow a losing tipster? Because it's reassuring to have someone hold your hand through what it feels like a very difficult decision. There's 100 golfers or whatever.
Yeah.
Which one do I pick? Or this person writes eloquently. They sound like they know what they're talking about, whatever. And basically, there were tipsters back then. People talk about Tom Segal or Keeley, but there were quite a few tipsters, either in newspapers or on the sort of early days of the internet, etc., who were just legitimately very good. And it was free.
Yeah.
And it was just sort of, in a weird way, it's just mad not to follow them. And the question is, if they're so good, that's another episode. I want to talk to you about tipsters actually for a longer episode at some point. We'll talk about that later. But whenever I see if they're so good, why aren't they millionaires themselves? Oh, it just grinds my teeth, that does. But
yeah, I mean, I can pick a losing favourite. Oh, why do we need a tipster? Yeah, that thing.
But yeah, so yeah, big fan. Followed those people who I just described there, those golf. I absolutely love is the guy who tracks all the golf tipsters, like 300 plus golf tipsters now. I'm like, you're clearly a nutter.
Oh yeah, I find it fascinating. Yeah.
To be able to follow 300 plus tipsters, random Twitter accounts, etc., and track them all. But yeah, I love that. And I always read, even if it's like something that I'm never going to use myself. Like, I love the SBC magazines. I love like reading up who's doing what. First thing I do whenever I go to Tipster website is like, where's the Excel? Where's the Excel? Where's the full results? And of course, I download that. And then I have to butcher the numbers a bit to fit them into my own spreadsheets I have for like analyzing it and stuff. And yeah, it was always a really fascinating area for me. So yeah, so I absolutely 100% believe. And like the ultimate validation to me of the whole premise is when you get people like Billy Walters talking about having just a group of handicappers that he aggregates, those are tipsters. When people talk about they found some guy tweeting on the internet, and they're like, going to have to take this guy off the public domain because he's clearly too fucking smart. So I'll pay him to give me his tips directly. Bookmakers on track 50 years ago would pay people who did tissues to cars. Like tipsters are everywhere. Tipsters are vital. Tipsters are like cornerstone of whether they're driving bad wreck money into the market, sadly, because they're charlatans, or whether they're providing information that's shaping the market or whatever. People can call them, call them consultants, tipsters, touts, handicappers, whatever, like that. People who like, and how they monetize that information is all varies. But opinions, there are good and there are bad, and they can come from a variety of different areas. But yeah, I'm a big tipster advocate.
That's fascinating. Yeah, I think we'll probably have to do a follow-up, like you say, on tipsters, and we'll get stuck into that in some more detail. I know I've had an hour and a quarter of your time so far, so I'm gonna wrap up with, maybe we'll do some shorter answers to some of these, like 4 questions here. Luke,
Do my best.
yeah, Luke Payton, who we both know. How does Matthew reconcile himself with the incredibly predatory nature of the business? A very short tweet from Luke that we're used to the longer ones, but
Yeah, I saw this question before. This is probably a question that is hard to answer shortly. I don't see my industry as disproportionately predatory. I see profit maximization as an endeavor as being inherently exploitative. How do I reconcile eating chicken that maybe has been purposely bred for steroids, and lives in shit conditions and dies in my KFC? How do I reconcile that my pension may have drugs companies that racks up the price on drugs to African third world countries? How do I reconcile humanity with being humanity, as far as I'm concerned?
yeah.
This idea that I in any way lose sleep or whatever because some people within the industry have not observed responsible gambling measures correctly, or some individuals have made bad calls. It's like there are bad people out there. And at the same time, I've worked with bookmakers for many years and met countless wonderful people, some of whom are very altruistic about how to deliver a proper product. There are still people within bookmakers and trading rooms who are still sort of very anti slots and online casino for all the good it does them. There's plenty of people who are trying to do things perceived the right way or whatever. But for me, as long as profit maximization is how we've decided as a society is the way to go. Capitalism, by definition, is societal gain is a byproduct rather than a goal. That may make me sound very cynical or pessimistic, but I feel no inherent guilt or no need to reconcile anything about the industry. And I think that any area that you're particularly focused on, social media, etc., rams it in your face more. Because I follow betting accounts, I'm going to have more people bet instances of someone who lost their home because they gambled too much or whatever. And it's a sample size issue. You never see the countless number of people who have no problems at all with gambling whatsoever and enjoy it as a pastime. I'm a huge believer that speculation is a necessary outlet for humans and that gambling actually provides a very safe way of doing it relative to some other things. So no problems reconciling it.
Great answer. Okay. And then Ollie Hubbard asks, if you were starting out in the industry again as a 20-year-old, which sports would you target and why?
So I'm going to assume from a betting perspective here.
Yes, I guess so.
So if I was starting out age 20, I wouldn't bet. It's not the optimal way to live a healthy, stress-free lifestyle, etc. Let's just put that out there. But in terms,
yeah, that's fascinating. You wouldn't get involved. You'd just think, no, there's better ways to.
No, I'd find other outlets. I think I continue to do it because it's what I know. But I think that there are other things I could have done. I used to really enjoy sort of creative writing, for example, things like that. There's definitely things I probably could have done in my life that would have produced greater, not to sound maudlin about it, but, would have been greater happiness routes than betting. I think volunteering for torture is essentially what many people who take betting very seriously are doing. Not that there aren't great rewards to be had. But yeah, let's just, so which sports would I focus on? From a purely, what is the largest global volume? I don't really like football, but I just focus on football. You could make an argument, I suppose, for cricket, but I think it's quite niche, whether the cricket liquidity is quite localized, whereas go to any country in the world that has any form of legal or even semi-legal or illegal betting, and you'll be able to place a bet on football in some capacity on some type of market. So it'll always be, what's the most popular sport in the world? Where is it easiest to hide yourself? Now, if he's going to ask me, is that the easiest sport to make money on? All depends on what you're betting on and what level you're betting at and which bookmakers you have access to. Find the shittest people to bet into, and you can bet EPL and win. Betting only into really smart people, then you've got to look for crappy leagues or crappy markets. But yeah, in terms of sport, assume that football's always going to have the most options, most live matches, most derivative markets, most likely to not raise alarm because guy betting on football inherently is not shocking. And then basically just find out what level of the pyramid I can bet and win at and try to claw my way up the pyramid, basically.
Good advice, yeah. Football betting. All right, so 2 more to wrap things up. Farley, this is a good one. There's only one question we need to ask. If Matthew got 5-2 in a coin toss, what percentage of his bankroll would he have on it? And I think this has been on some other shows before. There's been a variety of answers, but obviously you don't bet. But is it theoretically, then how much would you have on it as in terms of your bankroll size?
Bearing in mind, I don't actually have much of a bankroll because I'm not betting sort of like for my living or anything like that.
Yeah.
I can comfortably say all of it.
Yeah.
Because at the end of the day, it's all money I'm happy to lose. And providing I can tell the story, I'm a big fan of a shaggy dog story and telling a long-winded gag, as I'm sure most people are probably aware at this point. So I'd love to be able to say that I had X amount of purchase. But in terms of if I had to do it in secret, yeah, probably still the whole bankroll. However, if they said what percentage of your net worth would you have on it, which is a slightly different question, I'm literally going to use like a complete hackneyed rule of thumb that my father, my father's one of these people who literally has luck boxed every investment perfectly in his life, whether it's houses or random stocks he got advised, whatever. He was like, if I'm going to have something speculative, never have more than 10%. So even while 10% of my net worth is entirely the wrong Kelly calculation, it's one that will perfectly suit my utility. Because if it goes wrong, blame my fucking dad. So no problems with that. So I can quite happily say, if someone said we're going to liquidate everything you own now, all pensions, property, whatever, what percentage of that do you want to have on? 10%. Because that's what John Trenhaile said was a sensible thing to do.
There you go, John Trenhaile.
He's my tipster. Abdicate my responsibility to him.
There you go. Yeah, interesting. I think I've heard a variety of answers on that from people putting 50%. But then it comes down to a function of how much outside of that your bankroll makes for you on a basis versus what you'd return from that. So yeah, it's a difficult one to answer. It depends very much on what you're doing and how much of it.
There are so many people desperate to argue with this.
There are.
With you on this on the internet. Just go find one of them. People are going to get my nonsense answer because that's the one I'm happy to give.
Let's wrap things up. And this is you described this pre-pod as perhaps the most difficult question in the series. What's your favourite flavour of ice cream? Simon Cohen sent that one in. It's a tricky one.
It's particularly tricky because I adore ice cream. Absolutely love it.
Do you want this one then, if you're a connoisseur?
I'm going to start with a short list. So pistachio, mint choc chip, and there's like a cherry. It's sort of like almost a white vanilla ice cream with cherry in. And then I had a place in Malta that I would go to which did very, very dark chocolate. Not like your Wall's soft scoop, but like really dark chocolate gelato, which is really good. So these are the 4 that are in my rankings, right? So if I could only have one of those 4 for the rest of my life.
Drum roll.
I think it might be pistachio.
Wow. I didn't expect that. Does Simon know you? Is that why he's asked you this? Because you're a fan of ice cream? I don't know.
No, I don't think so. There's some other sort of slightly more offbeat. So my mum in Peru, where my mum's from, they have lucumas. Lucuma trees are often in people's gardens. They look like sort of small peaches almost. And lucuma ice cream used to be one of my favorites. I'm sure Brad Allen's been to Peru recently. He may have had lucuma ice cream. That's good. If you're in a Thai restaurant, nice coconut ice cream with sort of deep fried banana and syrup or whatever, that's lovely. Literally, I regret the pistachio already because I literally just love it. And if I'm having an affogato, which I fucking love, combines 2 of my favorite things, just really good vanilla. If someone, just for the nostalgia, if someone wheeled out the Viennetta, I'd be fucking overjoyed as well because it'd just be back in my nan's house in my mind straight away, having that. So I honestly love it. But I guess I just remember pistachio was like a weird color, and I didn't know what the fuck a pistachio was. It's my mum's favorite. And my mum was had her ice cream. And I remember thinking to myself, I'll be brave and I'll try it when I was a young kid. I remember thinking, I really like this. And so, there's probably slight tie-ups with childhood memories and everything in there. If anyone wants to look it up, you can look up brown bread ice cream, which obviously sounds ridiculous.
Wow.
But when they say brown bread, they may as well be just brown sugar ice cream. But it does have, but you look up that recipe is interesting. For the tape, as they used to say in financial trading, pistachio.
Pistachio, it's a buy on pistachio. Okay, I was going to say Dynamo ice cream. I don't know if you've ever had Dynamo, but it's like a dark chocolate with coconut custard. And it's normally like a bar, a Dynamo bar. So it's very much like a nice biscuit bar, but the ice cream is there. But I'm more of a chocolate with anything nutty or brownies in it kind of guy, not fruit.
I sometimes occasionally meet people who are sort of exactly my age, and the topic of ice cream might come up. And what we will talk about is there was this wasteland for home ice cream. You had a freezer in your bottom of your fridge freezer, whatever, and it was like chalk ices. And it's hard to describe chalk ices to people who aren't sort of maybe from the UK or whatever. But it wasn't really chocolate on the outside of a chalk ice. It was some sort of brown paint with sugar in it, basically. And it was pretty naff, but it was the best you got. That's what you had. You had chalk ices, and then you had cornettos a bit later, at the home.
Yeah.
And it'd be it was good. But the thing is, the cornetto, you were always thinking to yourself, oh, I wish we had a Mr. Whippy with a flake in or something like that. That's proper living, and you can't have one of those at home. And then Mars ice creams dropped. And you speak to anyone who was a child, that sort of 80s, when Mars ice creams fucking dropped, it was Jesus fucking Christ, what is this? There's no game that's been changed more. And then the funny thing is, it had this short window, and then people brought out Magnums. And now, of course, everyone thinks that Magnums are the shit, obviously. But, Magnums are good. But there was this one window where you literally would open up your freezer and there'd be Mum had bought a box of Mars ice creams. And you'd be just thinking to yourself, I just lost 3-1. Literally, just life's complete now. There's fucking Mars ice creams in there. It's it just couldn't get any better. I've met other people who feel as emotional about the Mars ice cream as I do. But yeah, it's one of those things where anyone who sees me will know that this is not implausible, but could definitely do a box, I reckon, without too much difficulty. So
there you go. Well, you had me at Viennetta. That used to be the Ferrero Rocher of ice cream. If you went to someone's house for dinner and they brought out the Viennetta, you were like,
it's
okay,
all class.
Yeah, I like this household. Okay. No doubt we'll get some answers to this. If people listen to the end of this pod and chip in with their own discussions on favourite ice creams, we could even do a specialist podcast on it, I feel, given the passion from you both sides on it. But Matthew, Trench, thank you so much for, an hour and a half of chat. So many questions, obviously quite a few I didn't get to, but I feel like we covered most bases. And do you want to tell people what you're doing? Because I know you've got your consultancy business and how they can find you. And if they want to engage you for whatever reason, how they can get in touch.
Yeah, absolutely. So I currently have my own consultancy, which basically provides consultancy on the trading and risk management from either perspective, the bettor or the book side of things. And it's called Anubis Trading. Anubis as in the Egyptian god of embalming. And you can find me either under Matthew_Trench on Twitter, and you can find me by just my name on LinkedIn. Those are the easiest ways to contact me. Or I think generally people who know me, I know that I'm happy to have my details given out to those people in the nature of getting more work. So if you know someone who knows me, that's also just a good way. And yeah, reality is that I operate a very strict I won't blag you. If I can see an obvious way I can help you. And as I think my LinkedIn profile says, everywhere I've worked, I have made people more money by me working there. And I'll only work with people who I firmly believe, after initial introductions, etc., that I think I could actually make a difference to. If you speak to me and I say, not for me, do not take any offense at that, because it could just mean that you're already doing such a fantastic job already. And I'd tell you that I can't add anything to it, or it's something that I'm not knowledgeable enough about, or whatever. But yeah, there'll never be a case of I'll charge you for 4 or 5 phone calls before then the 5th phone call I'm like, yeah, I just don't see it working. And then no, if ever we end up working together, you'll only get me if I know that I can definitely make a difference to you.
I think anyone listening to this podcast and the other ones will have a great understanding of not just your knowledge, but also how straightforward you are with it. And I definitely encourage people, if they have queries or things that they feel you can help, to get in touch, because I've enjoyed talking to you today, but listening to you over the past few years. And it's been great to get you on, Trench. And I'm going to go off and see what's in the freezer. There's probably some high value ice creams at the bottom of there, hidden underneath all the frozen peas. Thank you so much for coming on and spending time with us today. Thank you, Trench.